secure the $10,000 profit on the 1K to 10K account. Talk about that. Talk about that. Talk about $5,000 in a day on a previously $1,000 account. Fit check. My fit's actually going really stupid right now. Keep this shit. Know what I'm saying? Aha. Aha. And if it gets a little chilly, ah, shit. Oh. If it gets a little chilly, know what I'm saying? I need to put a belt on for real. But whole fit's going crazy. I know the shirt is tough as fuck, huh? Alright, chill on uploading your trades right now. Alright. But anyways, start uploading your trades and then we'll get into them. We'll do some trade recaps on them, alright? Everyone start uploading your trades. If there isn't no reasoning behind the shit, then I won't be able to analyze it, alright? I don't want to see just a fucking empty ass box and shit, you know, just like a fucking profit and loss machine. Alright, Connor, can you pause it? We got a shit ton of things coming in. Holy crap. Pause. Cool. Alright. Let's get into this, okay? I need to leave this on because here, we'll put it on the Ethereum chart. Or shit. Let's go to let's just do this because I need to do a trade recap for the 1K to 10K challenge. Okay, let's find the first trade that was sent. Okay, so again, an example of what not to do when you send in a trade. Sending something like this with no context and nothing there for it. Okay? So that's not what not to do. Marshall. Again, we got no context here. Again, we gotta get some context here. So here we go. Here's one with context for the one time. All right. Damn, kind of blurry as fuck. I'm not gonna lie, brother. Really fucking blurry. Here, what I'm going to do is I'm just going to open up this right here because this goes over everything that he put out. GBP NZD, geez, haven't heard that pair in like literally ever. Okay, good win. We'll see about that. All right, daily bias, daily / 4 hour bias was bullish. The 4 hour broke structure and price was in a discounted range. Good job. We'll go and look at the pictures after this, but we just want to see the reasoning first. 1 hour bias is bullish as well. Reason / confluences. 1 hour swept lows during pre-market. Fucking beautiful. And broke structure to the upside. Awesome. Waited for the price to revisit a 5-minute to 15-minute fair value gap. Awesome. Entered when I saw a 1-minute inverse fair value gap. You have been paying the fuck attention and I love it. Okay, so let's see what he was talking about here. That looks like USD ZAR. I wish I could figure out. This looks like the one. That's a short. This one's a short. Okay. I think this is it. This was the trade. This looks like the trade. So again, I'm really trying to see here. It would be nice if we got some better pictures of this. But this, just based off this breakdown, beautiful. Okay, yeah. We can see right here that that was part of it, and then it looks like, was it this one? This one? Looks like, oh, this is the high time frame right here. So if we go back to your analysis, revisit a 5 to 15 minute fair value gap, my guess is that was this right within here. We came down, we hit equilibrium, beautiful. Okay, and then he entered when he saw the 1 minute inverse fair value gap. I'm having trouble seeing which one it was. My guess is it's this one that you marked out, but can't really tell too much on that. But regardless, the way that you described how you entered was beautiful. Okay. Okay, so let's see here. Why did I get stoked out? Stopped out, maybe? Let's see here. Okay, so again, not much context here at all. But again, on this looks like you were using the 4x strat, London session high. Okay, we break above it. What are we waiting for? We're waiting for a break of structure to the upside on the 5 minutes. So we would want to wait for this, boom, for this candle to break above. So we would have entered off that, stops underneath these lows right here, take profit at these highs. That would have hit take profit. But as you can see, why is there, like, you're trying to hit a 1 to 30 risk to reward ratio off this. See that? Like, this is a ridiculous, like, this is really ridiculous. Okay. Okay, so again, this looks pretty similar where we're using the 4x strat. I don't want to go too deep into it. If you guys want to learn it, just go watch the YouTube video on it on the trading transformation. But anyways, push into the London session low. We get a break of structure to the upside. Looks like, okay, you said you entered off the 1 minute break of structure. Boom, perfect. Right, we have our stops underneath 1 minute break of structure, target London session highs. Again, you're going for too high of a risk to reward. I don't know why your take profit was right here. I would have put it at the London session highs. Again, we don't have much context here. I can't see the 4-hour time frame, can't see the 1 hour time frame, but we'll try and see what we can make out of this. We see a liquidity sweep. Okay, and then we see a imbalance right here. It looks like you entered just purely off of a liquidity sweep, break of structure, and then fair value gap getting filled. Unless there was some sort of price action within here for you to want to enter. It looks like you entered on the very top of this tick though. It doesn't look like there's much price action indicating that, hey, we're ready to go bullish from or bearish from here. So this, even though it hit take profit, again, the goal is to, even though some of these trades might take profit, you know, they might not be the best shots to take. Damn, my chest hurts. See here. See if we have more context. Doesn't look like it. I need some context with these. Okay, this guy, perfect. He wrote out his context. So when we upload these again, when I open up chat again, ideally we have some context with this, okay? Damn. My chest, bro. Fuck. Feels like something's stabbing right here. Okay, here we go. This looks like it was today. This was today. I saw a 1 hour bullish SMT, and we disrespected a 15-minute bearish fair value gap, and on NQ we disrespected an hourly fair value gap, so I thought we would go higher on ES. Then we swept 15-minute lows and tapped into a 1 hour equilibrium. And after that, I saw a 1 minute break of structure and a 1 minute inverse fair value gap and entered off that. What do you think I did wrong? And should I wait for a second confluence? Brother, guess who also took this trade? You were not alone. This was a really good trade. Again, we just wanted some lower action. And if we can zoom on in here, we can see that there was another entry after sweeping this out, right? Because our bullish bias remains the same. Everything that you said was my exact reasoning. So even though both of us lost on this trade today, I honestly think you don't got much to fear because you're getting this shit pretty fucking well. The only thing that I would do, again, as long as your risk management is up for it, I would be looking for another entry right here. And that's exactly what I got. And I was able to ride it all the way back up here. But over that analysis, fucking crushed it. Crushed it, bro. Hell yeah. Talk about literally giving all the context possible. Like, this is how we should be writing this shit out. Okay. Daily bias. Bullish previous day also created a huge fair value gap imbalance, which price would want to draw towards. Boom. Right here. Beautiful. And you can see here. You can see here that he marks out, boom, the equilibrium from this range high down to this range low, and he sees that it wants to get hit. Beautiful. Okay, from there, boom, equilibrium range on the 4-hour discount, equilibrium range on the 1-hour discount. Okay, he marked out again, the range again from these lows up to these highs, because again, we want to see that discounted price range get hit. Beautiful. Okay, from there, high confluence price range within here, sweep of liquidity. Man, I love seeing you guys win. We see a sweep of liquidity. Okay. See a sweep of liquidity. From there, scaled into the 1 minute. Boom, we're in here. First confirmation, inverse fair value gap. Boom, crushed it. Next, we have this order block. Boom, filled, enter, executed off of that, take profits, fucking crushed. Take profit was shit. I didn't think about it properly. Could have had a 2.7 RR, but had a 1.7 RR. That's part of the game. You hit a fucking awesome trade. You got daily bias correct. You analyzed fucking perfectly. You executed perfectly. Holy shit. This is way better than yesterday, boys. Good shit, Bart. You're a fucking animal. Love that shit. Let's see if I can. Holy smokes. This looks like a negative risk to reward ratio. SMT with ES. I'm not gonna lie, brother. I need way more context on this, but this looks like today's price action, if I might be correct. And we covered how we should have analyzed today with this guy Nedjic, this one right here. He crushed that shit. Okay, again, don't just be waiting for your trades to get, get fucking analyzed. Like, learn from these other people who are crushing. Okay, we're also going to go over the trades that I took today to help you guys out as well. Okay, everything went to plan today. I had equilibrium marked out on the 1 hour as well as a bearish fair value gap. I wanted price to come up into the discounted price as well as the 1 hour fair value gap. When market opened, we came up into the 1 hour fair value gap as well as equilibrium, respected the fair value gap, so I scaled down to the 1 minute and the 1 hour fair value gap was still being respected. Then we broke structure to the downside, creating a 1 minute fair value gap, waited for price to come up into the fair value gap and respect it, then entered when a 1 minute candle respected the fair value gap. Targeted 15 minute lows to improve on my take profits. I could have marked a lower 15-minute low, which ended up getting hit, but my confidence with take profits still isn't fully there, so that's something to work on. Okay, yeah, so again, if you guys were trading today, you guys probably could have gotten the full picture of like what he was talking about, but yes, this was pretty much the inverse of what I was looking for today, but again, you hit take profits based off of that bearish bias on the 1 hour, which is okay. For me, I had a bullish bias because overall we had a couple bullish confluences, but again, we still had some downside to get pushed through until flipping bullish, which is why my trades came later in the day today. So good job. Again, I need context on here. The people that are giving context with like their trade journals are fucking awesome. So we're gonna do those. If you guys right now, like as we're going through these and you guys want me to go over your trades, make sure that we have like context. Again, I told you guys to do this yesterday. All right. This was a gold trade. So this trade was taken during New York PM session. Saw price sweep high time frame liquidity to the downside and entered off a 15-minute order block. My bias was bullish. Price came into the order block, filled orders, closed out of it, invalidating a bearish fair value gap. Fucking awesome. In the process, this caused me to enter. I took partials before hitting final take profit. Okay, we're going to open up this one. Boom, as price came into London session, I was bullish and saw that price was already at a discount. I also saw price sweep sell side liquidity and break structure to the upside. When this happened, it invalidated bearish fair value gap, created bullish fair value gap. Wicked it and closed out. I entered TP hit. Beautiful. So again, we can see liquidity sweep, break of structure, inverse fair value gap, bullish fair value gap, filled, okay? My guess is he entered off of the inverse fair value, this inverse fair value gap, the liquidity sweep, break of structure, inverse fair value gap. Okay, we also see more bullish confirmation right here off of the fair value gap getting filled, and then boom, price pushing up and hitting take profit. We got one more here. This trade was taken during PM session. I had my bias for bearish, although the 4 hour was bullish. It was overextended, nice. And price hadn't drawn to a high time frame equilibrium. I love that you guys are fucking getting that. Okay, nice. Therefore, bearish bias. Let's fucking go. This PM session started. Price was already in a discounted equilibrium price on the hourly time frame. Good shit. I then saw a 5-minute bullish fair value gap get disrespected. Awesome. I then waited for price to trace back up into a 1-minute fair value gap and close out of it. Then I entered. Bro, fucking beautiful. Okay. Again, if you guys are like these guys get the shit. What we covered yesterday with the outline of how we should be going about finding daily bias, finding a high executionable like price range, highly probable price range to execute in, and executing the couple trades that I have been gassing up have done that like fucking perfectly based on the outline that I've given you guys. Again, look at this guy's bias. His bias was bearish even though the 4 hour was bullish. The 4 hour was in an uptrend. But why was he able to be bearish? Because it was overextended and price hadn't drawn into high time frame equilibrium. As PM session starts, it was in a discounted equilibrium price for him to be able to look for shorts. Okay? He saw a 5-minute bullish fair value gap get disrespected. Boom, confirmation. Then he waited for price to go into a 1-minute fair value gap and close out of it. Then he entered. Beautiful. He goes from high time frame bias to like medium / low time frame execution point, and then execute on the low time frame. Let's see. Again, I need a little bit more context here. Again, need more context on this. Let's see this one. Inside Okay, so inside discount for longs. Previous New York session lows got swept. 5-minute break of structure. Wait, let's see here. Previous, oh, wait. Inside a discount for longs. Previous, again, I would have to see if you drew out the discount correctly. See, no, I can kind of already tell here. 5-minute break structure alongside 5-minute invalidation of bearish fair value at TP at London session highs. Got stopped out. Okay. So within here, I believe that you drew out the equilibrium wrong. So you were drawing out, boom, from these highs down to these lows, right? You were saying that, oh, we're in a discounted price range because we're down here. That's not what we want to look for. We would want to look for from whatever the lows are down here, because you were trying to look for longs, right? We're not looking to take it from this high down to this low and say, oh, this is in a discount. No, this is a premium for shorts. Everything from this line and up is in a discount for shorts. Right now, you drew this out as if you're looking for shorts. So that's not what we're looking for. Ideally, it would have been some sort of lows that are over here up to the highs right up here. But you're saying that we swept out previous lows right here. So boom, that equilibrium is immediately invalidated. Maybe we can see a liquidity sweep and then boom, legs up. But we see, okay, a liquidity sweep. Okay, yes, we got an invalidation on the 5-minute, but we have to understand the high time frame, right? We come down and we push all the way past these previous lows. That seems like a break of structure on a high time frame, just purely based on like what you said. I don't have much context on this though. All right. Okay, let's see here. Ooh, we have a little stock play. Interesting. See how this goes. Again, if I'm skipping over your trade, it's because there's not any like written out bias. So again, as I'm doing these, if you guys want me to go over the trades that you guys took, please write out like how you find daily bias, how you like your whole thought process. Again, this should already be written down in your journal. Okay, I took shorts on Tesla. It worked in my favor and hit take profit and shot all the way down past that. This setup was more organized, but it was my first time using an hourly fair value gap, so I was a little iffy about it. It's okay. But price did exactly what I wanted it to do. Good. During the trade, I was more confident since it was more organized and I had clear understanding of everything going on. My emotions were in check. Okay. Well, damn it. I thought that was I thought you were going to explain your reason for entry, but let's see here. Yeah, we don't get much reason for entry, so that's unfortunate. But I'm glad that you hit take profit. Okay. So we just got through a lot of trades. Again, I want you guys to, when we open up chat again, if it doesn't have like reasoning and all that in there, I can't even give you guys opinion on it. That's like me going in here and being like, wait, no. It's like me going here. TJR, why did I get stopped out? Hey, so what happened here? You know, I can't see the higher time frames. Like ideally we have screenshots on all of that stuff. But again, I know that's hard. At least just write it out and then show like the executionable time frame. All right? So 3, 2, 1, open chat. All right, pause that shit. We got a lot of entries here. Sorry, I'm just biting off my nasty long ass nails. Give me a second. Oh damn, bro. The first Cheyenne, the pictures didn't get pictures didn't send. Entered with a bearish bias due to the fact. I'll just read it over though and tell you if like the whole reasoning was right though. Entered with a bearish bias due to the fact that price wasn't in a premium. Nice. Wanting to enter a discounted range on the 15-minute, confirmed by a break of structure on the 1-minute time frame, and my secondary confluence was a fair value gap on the 1 minute as well. Perfect. My target to take profit was a draw of liquidity. Awesome, which just happened to be above a fair value gap as well. Perfect. My stop loss was based off an order block. Risk to reward 1-to-1. Still a great win in my eyes. Awesome. Please don't hack my shit. Oh. Oh, cool. Let's see here. Cruncher. Okay, let's see. You executed that shit today. So price bounced off off of 15-minute ranges, equilibrium, 15-minute bullish fair value gap overlapping it. Awesome. Entered off of 1-minute candle, disrespecting a inverse fair value gap with speed and strength, took half off at TP1 and break even on the rest. See what this looks like. Boom. So this is the 15-minute fair value gap. My guess is that's the 15-minute fair value gap. 15-minute range equilibrium. Bullish 15-minute fair value gap. Okay. Oops. Oh. Is this the 15-minute? No. This looks like the 15-minute fair value gap overlapping with the equilibrium. Cool. Inverse fair value gap. Awesome. Enter off that. Stops underneath the inverse fair value gap. Boom. Perfect. Me personally, bro, that's a really solid trade. I'm trying to take full take profit there, right? That would probably give you like a 1 to, and some change risk reward ratio. But good job overall. For today, I'm predicting the market to be for Apple. Oh, look, we're already on Apple chart. Cool. To be bearish. We swept liquidity on the 12th and had a market shift into a bearish trend. We created an imbalance while doing so on the 15-minute time frame. The imbalance only retraced into on 1613. I believe market will retrace into the imbalance tomorrow and break structure back into a bearish trend. I will scale down to the 5-minute and find an entry. This is options trading. I'll switch to futures soon. Okay. What it should look like. Okay. Entered on the sweep for a put. Is a put a long in options? Anybody know? Okay, I don't have much context for this, but my guess is it did go up in there. Oh, okay, I can see. So boom, price went up in there. Okay, we do get a break of structure, and then we fill this fair value gap within here, and then price ends up going lower into this fair value gap. So you're asking, how am I supposed to use for fair value gap? How long am I supposed to use fair value gaps for? The biggest thing is when price moves into a fair value gap and then it moves out of it, that means price is balanced within that fair value gap. So odds are if a fair value gap gets used once, typically that means, okay, the imbalance is now balanced out. So I no longer necessarily consider it. On NQ, my bias was bullish. I found my bias on the 4-hour, seeing a sweep of liquidity. Okay, seeing buy side liquidity, also seeing that bearish imbalance. So my guess is this, all this. Oh, this was the other one that I said I needed more context. Cool. Honestly, I thought price would have been bearish. Wait, pause. My bias was bullish, but then you said, honestly, though, I thought price would have been bearish because price was overextended, but I stuck with bullish bias due to the other confluences I saw. Okay. I scaled down on the 1 hour to finalize my bias. I also saw a 5-minute bullish fair value gap right within here. This is during pre-market, though. Being respected during pre-market. I noticed an inverse fair value gap on the 15-minute. My guess is that's this. Where bullish PA was playing out. I waited for news after 9. News actually came out at 10 today, so that could have been a reason for a loss. Entered on the 1 minute when I saw price tap back into that 15-minute bearish for value gap and pushed higher. After also seeing a break of structure, took a 1 to 1.4. Not too great, but I'm happy to end this week green. I'm not gonna lie, I'm not a big fan of this trade. Okay, so this was on NQ. We'll go over NQ real quick. So I had a bullish bias today as well. And the reason for that was, cool, we'll go over my trades really quick. Or, no, we don't even have to go over my trades. We'll just go over my analysis to give you guys the overall picture. But boom, my bias was bullish. Why? Look at this. Low, higher low, low, lower low. Bullish SMT divergence. Okay. On top of that, when we scale into the 15-minute, what do we get? Or sorry, no, scale into the hourly. Right when market opens, again, we had news at 10 today. What did NQ do? Invalidated this bearish imbalance. ES stayed within the imbalance. And also, in the process of all of that, another set of bullish SMT divergence. And that led me to be bullish today and take several winning trades. Okay, but I'm not necessarily a fan of this trade. I agree with the bullish bias, and I also agree with the liquidity sweep on the 4-hour on ES. Boom. NQ, we didn't have a 4-hour liquidity sweep though. So again, that partially not a fan of that. I do like this fact that you saw that the 1-hour imbalance was disrespected. I feel like there just could have been, you could have had a better risk to reward, is what my opinion is on this. Let's see here. Marked out equilibrium on the 4-hour. Saw that we were in the discount for NQ, so I was looking for buys. Cool. Waited for a 5-minute break of structure. Went to the 1 minute and entered off a fair value gap, but stop loss on a low below the fair value gap. So let's see here. Boom. We're within the discounted range. Also, there were several ways to find the bullish bias today. There was a liquidity sweep on ES. There was SMT divergence. And yes, we were also within the discounted price range. Okay, so we saw break of structure to the upside on the 5-minute. Okay. Entered off of 1 minute fair value gap. Having a hard time seeing the 1 minute fair value gap here. This is not a fair value gap. Top wick of the first candle, bottom wick of the third candle. There's no fair value gap here. Unless you're talking about this bullish fair value gap within here, where it's boom from this wick to this wick, and then this wick to this wick. There's 2 bullish fair value gaps, but what happened? Those got inversed. So I don't see really any reason for entry here. Entered off the 1 minute fair value gap. I don't see a fair value gap here. So again, even though this looks like it was able to hit take profit, we need to learn from our mistakes here. Because again, we can still take bag shots and they can still go in. Let's see here. My bias was bearish, but changed to bullish after I couldn't find any confluences to go short. If that's the case, you don't trade. All right. Again, you found your daily bias with equilibrium on the 4 hour. Cool, but you still took a long. So I'm not even going to cover this because you completely broke your plan. You had your bias, but then you couldn't find any confluences to go short, so you just completely were just like, okay, bet I still want to take a trade today, so let me just go long on some bullshit. Not a fan of that one, man. All right. So during pre-market, I saw ES's lows got swept. Nice. As well, it was under equilibrium. Nice. I saw that the price was oversold. Nice. So that basically told me that we were bullish for the day. Nice. But ES wasn't giving me a good setup. So I went to NQ and I entered off a 15-minute. Let's see what's happening here. This is like a negative risk-reward ratio, but that's okay. So I went to NQ and entered off a 15-minute bullish fair value gap, getting filled, as well as a 1 hour bearish fair value getting invalidated, right? We already showed that on the chart. So from there, I waited for a 2-minute break of structure to enter, but then I got stopped out immediately. Yeah, so I would say there's a bunch of things wrong with this. First of all, yes, we did. We do have the bullish bias, right? And we do want to take longs. And yeah, we did come through and fill in this 15-minute fair value gap. Okay, but the entry is where we're kind of lacking. So I don't really want to delete much of this. You very well could have gotten a much better entry. Okay, invalidation of the fair value gap bet. Cool. Where do we need price to retrace to? Equilibrium. So we have boom, swing lows of this 15-minute up to here. Boom. Okay, 15-minute fair value gap, awesome. Scale down into the 1 minute. Off of that, this very well could have been off of two things. Yeah, you can host another trader review call tomorrow, Connor. This could have been done off of two things. Boom, either a break of structure to the upside off the 1 minute, or two, invalidate or an inverse fair value gap right here. So we either get an entry off of this candlestick right here with stops underneath here, targets, previous highs, 1 to 2.7 risk reward ratio, or we take it off this, stops underneath the inverse fair value gap, 1 to 2.9 risk reward ratio. So just scale on in that entry a little bit better next time. That's all that it takes. And I would suggest against using the 2-minute time frame if I was you. But that's good. Ideally, we cover more losses than wins in this, because if we're just showing wins and like trying to brag about the shit, then we're not really learning anything. Just got out of this. I took the same exact trade on NQ. Yeah, so we have an order block. Okay, we pushed into it. We swept out. We swept out high time frame lows, bullish bias, missed the first entry. My guess is that would have been the break of structure. But yeah, I took the same exact trade on NQ to pass my little 1K to 10K challenge. But again, I would ideally like to see a lot more context on this for next time. Okay. First things first. Okay, so we have 1 hour equilibrium bullish bias. That's good that we see that get hit. But you're pointing to this thing that says a sweep. I don't see any sweep here. We do come back down into range equilibrium after disrespecting this inverse fair value gap, which is good. And then entering off of, I guess, where is it? I mean, I guess you said off the respected fair value gap. My guess is that was this inverse fair value gap. I need more context on this, but this looks relatively good. I mean, you had a decent 1-to-1 risk reward ratio off TP1, so looks pretty decent. Let's see here. Entry details. I saw in the 4 hour that we were bearish, but we didn't hit equilibrium, so it was my bias to have longs. Awesome. Then I saw the 4 hour fair value gap that we tapped into, along with 1 hour liquidity being swept. Nice. Scale down to the 1 minute time frame where we were in the macro. Nice. And I saw a inverse fair value gap along with a break of structure, and that was my entry. Let's see. I was targeting the equilibrium level to exit all of my position. Perfect. And it did. And I can also target the liquidity that is inside the equilibrium that could be potentially hit. Fucking awesome. Okay, so here, the 4 hour time frame was bearish, but we didn't hit equilibrium, so his bias was longs. Okay. So from there, my guess is like this was equilibrium or something along those lines. Okay, he saw price, boom, sell off. Okay, sweep out liquidity on the 1 hour and also fill a 4 hour fair value gap. Awesome. Okay, and then from there, what did he see? 1 minute inverse fair value gap. Okay, my guess is that came off of this. Boom, this bearish inverse fair value gap. We also break structure off of that. Awesome. Enter off that. Stops under there. Take profit was based off equilibrium. Could have also targeted these highs. Perfect. Let's see here. Okay. Let's see. Found premium and discount range on the 4 hour before pre-market opened. It was overall bullish uptrend. Why did you drag it to all the way up? Why was it up here and not on these highs? Marked out equilibrium in the highs and lows. I guess you're talking about this. I'm already not a fan of this. We have it from these lows up to like non-existent highs up here. Where is this being drawn to? If anything, it should be drawn to these highs right here. It definitely should be drawn to these highs right here. Has to be. I don't know what highs these are on. Nowhere. So again, that kind of invalidates most of what I would like to be looking for here. Fill in a fair value gap. But again, we took shorts here when you said that pre-market opened in an overall bullish uptrend. So again, even though this maybe this did hit take profit, first of all, it's not a great risk to reward ratio. We need to remember what was our daily bias. We need to draw out equilibrium correctly. This looks like an overall bullish bias with price coming into equilibrium. Trade on the S&P today. took a very similar one to this. Entrance, SMT divergences on the 15 minute and the 5 minutes. Nice. Okay. Saw a retest into 1 hour order block / fair value gap right here. 1 minute liquidity sweep. My guess is it's this. Technically like a 15-minute liquidity sweep if I remember correctly. Order block retest, which was this line right here. My guess is this was like whatever this was, like a 15-minute order block. Oh, sorry, hourly order block. Entered with 2 contracts after bearish for value gap gets invalidated and a bullish for value gap gets validated, and we enter off that, stops underneath the inverse for value gap. Fucking perfect. Okay, we hit 1 take profit. And then put stop loss at break even, ended up getting hit out at break even. For me personally, I'm entering right off after this break of structure or right after this imbalance gets invalidated. So I'm having this as my entry and my stop loss right at the same spot as yours, but I'm just having a way earlier entry than waiting for that fair value gap. Because again, think about it. We're already coming down into confluences, right? We're coming down into an order block. We're coming down into fair value gap. We're seeing a liquidity sweep. We're seeing a break of structure. Least we can do is target these highs. But overall, good overall breakdown. Look for bias on the 1 hour. That was bullish. And then ES already, then ES already was hit when London session opened. And then was already hit when London session opens and just basically got up. I entered on the 5 minute because of an inverse fair value gap. And equilibrium, I targeted. I can't read much off this alone. We got equilibrium drawn off of, I don't even know if this is a candle's wick, up to not even the highs of these candles. We have this random red box right here, which I don't know what it's indicating, so not enough for me to even give any critique on that. Okay, so this was 3 days ago. We were overbought, so I was bearish. I had equilibrium marked out on the 1 hour, nice. As well as a bearish for value gap, nice. I wanted price to come into the discounted price as well as the 1 hour fair value gap. When market opened, we came into the 1 hour fair value gap as well as equilibrium, nice. Respected the fair value gap, so I scaled down in the 1 minute, nice. And then the 1 hour fair value gap was still getting respected, nice. Then we broke structure to the downside right here, nice. Creating a 1 minute fair value gap right within here, nice. Waited for it to be respected. Then when a 1 minute candle respected it, entered, targeted 15-minute lows. Beautiful. Beautiful. Price was in the discounted zone as well as a 1 hour liquidity sweep, okay. 1 hour liquidity sweep. My guess is there was something down here making my bias bullish. Okay, so we were in a 4 hour discounted price array. Okay, on top of that, we did a 1 hour liquidity sweep. Okay, there was a 5 minute break of structure to the upside. It also made a 5 minute bullish fair value gap. My guess is it was right here. Once the candle closed above the bearish fair value gap, which is here, I guess. I wish I could see like a little bit better, but TP was drawn, liquidity, stop loss at the last low. Pretty fucking solid. Good job at finding the overall bias. Wanted to see that discounted array hit. Saw 1 hour liquidity sweep. We saw a break of structure. We filled in a bullish fair value gap. My guess is you were talking about this, or I don't know. Oh, it's this right here. Awesome. And then you see an invalidated bearish fair value gap. Beautiful. Enter off that. Nice. Okay. I don't have enough context on the journal entry here. I need to see how we found that daily bias. I just have the 15-minute strong fair value gap, 5-minute bullish S&T, 5-minute break of structure. Yeah, I need a little bit more context. Okay, let's see here. I saw with, and again, guys, I'm not just saying I need more context for me. You need more context for you. If I'm telling you that I don't even have, if I can't even figure out why you guys took the trade for you guys explaining it, then you guys are not journaling well enough. You see the people that are journaling and I can fully just picture what they had traded in their head. You guys should be doing the same shit on your trading journal. And if you guys aren't, 2 or 3 steps behind everybody else that is. Again, I can only tell you guys to do so much. Remember what we talked about in the first week. I can only do so much with you guys here. Okay, I saw with the equilibrium that we were bearish because there was a big imbalance on the price. Okay, so boom, from here down to here. Nice. 1 hour liquidity was swept. My guess is something within here of the liquidity being swept. Scale down to the 5-minute, there was an equilibrium being hit. Okay, we can see that this was the equilibrium. 1-minute order block. Boom, this 1-minute candle to the upside indicates boom, break of structure. Okay, we have this order block with a break of structure and a fair value gap being tapped into. This is the fair value gap. For me to enter the trade with confidence, but I recognize that I should wait for 10 a.m. to hit so I can look for my entry even though everything else was hit. I can wait until 10 a.m. for confirmation. Yeah, I would wait a little bit later. Typically, I like to trade from like 9:50 to 10:10. That's a really good time to be looking for trades, or really from 9:50 to 11. But overall, this is still pretty solid. My head hurts. Lots of talking today. All right, let's see here. 4 hour was bullish. Also was already hit the discount. 1 hour was bearish. However, we got a liquidity sweep. This is the 1 hour. Boom, we got the sweep. 5-minute break of structure. My guess is that happened right down here. Left in order block. Again, this is not how I teach order blocks, so can't really speak too much on it, but this right here was an overall good trade, but for different reasonings. Again, I would like some better reasonings here. PS3 pictures? Yeah, I know. I clicked through them. I clicked through them. I was just reading what he said and clicking through the pictures to make sure it was like valid. But anyways, let's see here. Oh, holy shit, Lesno, I completely skipped over your shit. I'm sorry. I'll do yours. Bullish 4 hour equilibrium was not hit, so we were bearish. Saw a 1 hour fair value gap. And some small liquidities to the downside to be taken out. I wanted a 5-minute breaking structure. My guess is that happened right here. I scaled to the 1-minute time frame to find fair value gap and inverse fair value gap. Order block found a small fair value gap. Right here is my guessing, and right here as well. Got hit and we expected it. After that, I waited for a 1-minute break of structure and entered stops with both fair value gap. This was today. I hit the low liquidity, but it was a 1 to 5. RR, I wanted bigger and better trades with less win rate. Okay, so did you win or did you lose this trade? It looks like a loss. But anyways, something that I would look at would be boom. Remember, are we looking to go short within a premium price range? So if we took the GAN box from this range high down to this range low, we wouldn't be at equilibrium. Equilibrium is probably sitting like right up here. And as we can see, boom, from this down to here, we probably would have went further down. And also we can see that we're sweeping liquidity right here. And my guess is, I'm pretty sure this was today. And we were bullish today based on most of the other people's analysis. Okay, here we go. Got a big one. Meant to trade macro NAS, instead I traded the regular NASDAQ Gs. That's okay, at least you're on demo. Check the 4-hour time frame to set up equilibrium. Couldn't find good candles, so I broke down to the hourly. Okay, not bad. And found high time frame equilibrium. Okay. That was a bullish trend overall, and I've already broke down into a discounted range. Okay, nice. Scaled down to the 5-minute, looking for draws on liquidity or liquidity that has already been swept or soon to be swept, and found a liquidity sweep to the upside. So my guess is you saw this as the sweep. Then on the liquidity sweep, I looked for the leg down prior to it. So this, actually this right here would have been the order block, not this one. Because we can see that this actually was the leg down. This was a leg down, but then price continues that bearish price action. Where does price reverse and turn into bullish price action after this leg down? So that's one thing that I would change. I wanted to see if price would respect it and not close below it, but instead tap into it and proceed upward, which it did. Okay. And for my final confluence, I looked for a break of structure after that. After that fair value gap was validated to the upside and for it to still be in the discounted zone for me to enter longs. Okay, so break of structure, boom. So yes, this does look good, but we could have had better analyzation of confluences. This is the order block, and we see break of structure. And honestly, you could have entered off of this right here. Look right here. Boom, liquidity sweep. We see a break of structure on this candle right here, and we see a inverse fair value gap. What else could we see? Boom, a bullish fair value gap getting respected, as well as this order block getting tapped back into. We can get a way better entry down here. Okay, let's see here. Daily 4-hour bias was bearish because of draw and equilibrium. 1-hour bias was bullish. Confluences reason sweep of 1-hour highs followed by a 15-minute break of structure. Awesome. Scaled down to the 5-minute price, revisited 5-minute equilibrium. Awesome, as well as fair value gap. Entered one, saw the rejection off of the equilibrium and fair value gap. Let's see it. Okay, so we see the sweep of liquidity, and then we see it looks like a potential break of structure. I can't really tell too much here. Pretty choppy looking price action right here. But let's see, what was the reason again? Break of structure on the 15-minute. Scale on the 5-minute, price revisited 5-minute equilibrium. So my guess is that's from this high. Again, it kind of looks like we're having trouble drawing out equilibrium. It should be from these highs down to these lows. Not right here. Down to these lows. But anyways, as well as the fair value gap, I don't see a fair value gap here. So in my eyes, not necessarily a good one. I don't see equilibrium being drawn out correctly, and I don't see a fair value gap anywhere on here. Alrighty, let's have a couple 5-minute fair value gaps. Not enough confluence on, or not enough daily bias was explained here, J Plum, but it looks like you took very similar trades to everybody else today. So overall, pretty fucking solid. See here, last but not least here, okay, we'll do these last two actually and go overtime. Okay, let's open this guy up. Let's see here. Bullish confirmation from range equilibrium. My guess is it was this. 5-minute fair value gap retested and hit 50% mark. Then I saw 1 minute break of structure out of confluence and entered. 1 minute break of structure. Beauty. I like it. I like it. I like it. I like it. Okay, we got the lick back from Tucker Trades. I was bearish on the day. News came out and dropped, which the market created a bearish for value gap. So my guess is this is, so 1 hour equilibrium, 1 hour fair value gap. Price reversed it. Wait, what? Which respected, and when price reversed, it invalidated 2 bullish fair value gaps. So this one and this one is my guess. I entered on the candle close to the downside. So this bullish fair value gap and this bullish fair value gap, and you entered off of this one is my guess. With stops above here. This looks exactly like price action today on the S&P 500. In fact, I know it was price action today on the S&P 500. And overall, we should have been bullish for the day because of everything else that we have talked about. Yeah, Connor, you can link that. But if you just rewatch this video, you'll see so many examples from today on why we should have been bullish. But anyways, oh yeah, here we go. This is super useful. We have profitability calculator, position size calculator, and Forex lot size calculator. Okay, so boom. This is really useful, boys, for whatever pair you want to trade. If you're a gold trader and you have a $10,000 account balance, you want to risk 1%, and your stop loss is 50 pips. Calculate it, boom, 2 lots. Let's see here on this, we have E-mini S&P. Stop loss is, let's say, 15 points. We want to risk 1%. Account size, let's say $100,000. Wait, what is that? $100,000. Calculate it, 1 contract. Let's say it's 5 points. Calculate it, boom, 4 contracts. Plain and simple. And then also on top of that, this is super useful for you guys. Let's say we have a 30% win rate and we have a 1-to-1 risk reward. Boom, we can click that. You suck at trading. Okay, but let's say we have a 50%. Oh, we're break even. What happens if we're 51? Barely profitable. Okay, let's say our risk reward rate, our average risk reward is 1 to 4. Boom, we're profitable off the 30 win rate. Boom, we're profitable. Okay, use this to your advantage, guys. It's going to be really useful when calculating lot size, when calculating contract size. All right, boys, with that being said, I appreciate y'all. When am I going to catch you? Connor's going to catch you guys tomorrow for some more trade recaps. I'm going to catch you guys on the 17th. I think that's Monday or Tuesday. All right, but with that being said, I love y'all. Peace out, boys.